This month of September, the CBK reopened two fixed coupon bonds for investments. The two bonds were the FXD1 2024-10 and FXD1 2016-20. So far, we have looked at the FXD1 2024-10. I would want in this video for us to go through the FXD1 2016-20 for purposes of learning, and maybe if you consider it a good investment for you, you can go ahead and bid. We are still within the bidding period, which began in 4th September and is supposed to expire on 18th September. During this period, if you do not have your DAO-ZSD account, you can download the DAO-ZSD app in your phone and go through the simple process on how to open your account and create one. It will get approved in a record 2 days at most, and you will be able to bid for a bond if you are prepared to do that investment. If you would want to go through a video to learn on how to open the CSD account, this video is available in my channel under the bond playlist. There are other numerous videos that you can go through and learn more about investing in the bond market and the other avenues that I've covered in various videos. We shall go through step by step the important things that you need to be looking for in future reopened bonds for purposes of your consideration to invest or to ladder your existing portfolios after 3 seconds break. Don't go away. Subscribe to the channel if you're new, and let's interact in the comment section. So welcome back, and thank you for that subscription. To get more of this kind of content, for the notifications, hit that notification bell, and we are grateful for liking the video. The first thing that we need to note in future going forward is that full name of the bond, whether a fresh issue or a reopened issue. The FXD1 2016-20. The FXD1, that's the acronym for a fixed coupon bond, and the numeral value 1 means that it is being reissued for the first time. If it was FXD2, it would mean that this fixed coupon bond is being reopened for a second time. The second part of the name, the 2016, that denotes the year when this bond was first issued or sold. And the last part, that gives us the full maturity or the horizon for that particular bond. So the 20 is not the new, or is not the period, the investment period that you are buying into a reopened bond. That is the horizon for the particular bond from its original issue. The 2016 was the original year of issue. So from those two, we now look at the year and the month when it is reopened. And in this case, we are looking at 4th September 2024. The date 4 and the month September, they are very important. The year 2024, equally important. When we look at the year, original was issued in 2016 and now reopened in 2024, the difference between those 2 years, if you take 2024 minus 2016, you are getting a difference of 8 years. That is the part of maturity of this bond that the bond has so far aged or covered. So what is remaining, the period remaining out of the total 20 years maturity of the period, that is what we are buying into. That is to say then, this reopened bond, we are investing in this bond for a maturity period of 12 years, which is the maturity period remaining to maturity of the bond. Then the second part, which is the month and the date, that one will guide us in the determining whether this bond has an accrued interest. This kind of sale in the bond sales, it's a come interest transaction or cum interest sale. The word cum, C-U-M, in finance means together with. So you are not only buying or investing into this bond as per your par value, you are also purchasing the accrued interest for the period from the previous coupon payment date to the value date of this particular bond, where value date is the exact date once your money has been accounted for, acknowledged and accounted for by central bank and updated in your DAO CSD account. That is the first day that the amount has been accounted as received or invested by you. So the last day when the immediate previous or last coupon was paid to the value date of the investment that you are now making, that those number of days, the interest accrued in that particular period shall be purchased by you as an investor, and you will be paid back your interest in full, just like any other investor previously holding this bond on the coming coupon date. Where do we get those dates when the coupons shall be paid? That is the part of the bond prospectus that we call the amortization schedule, which gives us the amortization structure. The bonds pay interest 2 times in a year. That's what we call biannual. So, for example, with this particular bond, you'll be receiving your coupons in March and September. So September becomes relevant to us because this is the month when this bond has been reopened. And so we are now going to look at the specific day. This particular bond shall be paying its coupon on 15th of September. And our value date as per the reopened issue is 23rd September. So if you look at the 2 dates, there is a variation of 1 week or 7 days. The 23rd, that is when our investment shall be acknowledged and accounted for in our portfolios, in our DAO CSD accounts, and the coupon will have been paid by 15th of September. Therefore, from that day 16, a new coupon will start accumulating, or accounting as accrued, will start accruing on a daily basis for 7 days. So we are supposed to determine this accrued interest for the 7 days up to our value date. That interest has to be bought by the new investors in the bond. And this only happens in reopened issues. Original issues have nothing to accrue because the investments have not yet been done. But once investments are done, interest starts accruing on a daily basis. Therefore, that month when the bond is reopened, the specific month when we are doing our purchase, is very important in determining the accrued interest, which you should be able to calculate for yourself. How do you go about it? Once you have determined the number of days on which interest has accrued, and in this case we have identified the 7 days. Look at 23rd September and 15th September, we have a gap of 7 days. So what do? You determine first interest per day. And how do you do that? Take the coupon rate. And the coupon rate here is 14%. Divide 14% by 364 days. That is a period in bond investment that covers a 1-year period. It's the same number of days that we use when we are determining or we are covering treasury bills for an annual or on a yearly basis. So once you have divided that figure, whatever you will get, that is the interest per day. So multiply by 7 to get the interest for the 7 days that will have lapsed or interest will have accrued. Whatever you will get, that is your accrued interest. interest that you shall also pay together with the amount that you are investing. But before we get lost in all those details, the other thing that is important is the face value, or the amount that we would want to invest and what we will pay. In most cases, when a bond is reopened, many a times the amount that we shall pay for that investment will either be at a discount, meaning that if the par value that we quote is 100,000, or let's use the minimum for this particular investment, which is 50,000, at a discount means the amount that we shall be required to pay on notification after the auction will be less than the 50,000. But our investment is 50,000. But the amount that you pay to central bank is less than 50,000, and that happens when the existing average market yield or market interest is higher than the bond coupon. In order to make the reopened bonds competitive and attractive to new investors, then the central bank must compensate for the interest or incomes that would have been lost, the opportunity cost of not investing at the current market prices, at the current market rates. So if you look at today, this bond has a coupon of 14%. The market rates are in the neighborhood of 16%. Then it means that for this bond to be attractive, the central bank must issue it at a discount. The first calculation that we are going to work out is an actual determination of the accrued interest for this particular bond. And this is how we will go about it. We need the data to use in our calculation, and as earlier we have discussed, the first thing that you require is the value date for the new reopened issue. And in this case, our value date is 23rd September. Then the second date that is very important is the coupon date for this bond, which is 15th September. The third data that we require is the coupon rate, which is 14%. Then now with that, we need first to calculate the number of days or the period over which interest has accrued. And this one will get the difference between the value date and the coupon date, which is giving us 7 days. Once we have the days, we are going now to calculate the actual interest accrued by taking the coupon rate of 14%, we divide by 364 days in a whole year to get the interest per day, then multiply by 7 days to get the interest accrued for the 7 days. And this figure that we get is 0.26923076 blah blah. But as per the calculation or the standard by the CBK, its figures are rounded off to 4 decimal places, not truncated. There's a difference between the rounding off and the truncating. They are rounded off to 4 decimal places, and therefore our actual interest accrued per 100 shall be 0.2692, and this is the exact value that has been given by CBK as per the prospectus. Once you have calculated your accrued interest, at that point you are able to determine the dirty price for whatever yield or rate that you quote, if you are quoting ENZA or if you are bidding competitively. As per this schedule that is given in the prospectus, it gives you a guide of prospective clean prices for respective market rates for competitive bidders. For instance, if you bid competitively at 16%, then your clean price is pegged as per the schedule is pegged at 89.462. If another person bid competitively at 16.5, which is at the bottom there's a schedule, the clean price is pegged at 87.1657. Once you have that figure, the clean price, you add the accrued interest per 100. Remember, the clean price is at 100. So you add the accrued interest. So you get that 87.1567 plus our 0.2692, which is the accrued interest per 100. The resultant value is the one that we call a dirty price. So dirty price combines the clean price and the accrued interest. And it is the dirty price that we multiply by your face value in hundreds to get what you are supposed to pay for your investment after the auction, which is the one that drives the discounted values or the par values or the premiums, depending on the bids received during the auction. So once we have done that, we can also look at what one would be required to pay in the case they have bid competitively at 16%, which we have said that the clean price at that point or for that particular rate is 89.4672. That figure already tells you that if that was the accepted average market rate, then it means that the issue would have been discounted by 10.5828. A discount of 10, which means that for every 100, you will be required to pay 89. So the actual price that you are going to pay shall be the clean price of 89.4672 plus the accrued interest of 0.2692, which gives us a dirty price of 89.7364. If the par value that you quoted while bidding was 50,000 and it got accepted, and that is the accepted or the average market rate after the auction, and that bid was accepted, then the amount that you will actually pay shall be 500, which is the number of hundreds in 50,000, which is your par value, multiplied by the dirty price of 89.7364, which gives us a total value of 44,868. That is actually what you pay for the par value of the 50,000, meaning that your investment has been discounted by the difference between what you pay and your par value, which gives us 5,132 shillings worth of discount for that investment. But remember, during redemption, you are not paid back what you paid for the investment. The discounting is to match this investment with the market. So what you are supposed to be paid on redemption, on maturity of that bond, shall be the par or the face value of your investment, which is 50,000. You will not be paid back the 44,868. You will be paid back 50,000. So what is important to do at that point as an investor? Whatever capital that you set aside for investment should be dedicated in investments. Because at the end of the day, as we shall be looking later so that we don't make this video too lengthy, is that our main objective is to build a volume, an amount, the object against which a rate, the coupon or the interest rate is subjected to realize your goal passive income, to realize your goal interest amount that passively will cover the period as per your plan. So that said, it means any returns that you are receiving from this investment, whether by discounting or as coupons, you are supposed to make sure that those amounts are reinvested so that your investment acquire the benefits of compounding. There is a miracle in compounding. So this amount that has been discounted, the 5,102 shillings, because you had already set aside 50,000 for this investment, you are supposed now to invest that money in another opportunity that accepts that minimum. And most preferably is that now, because money market funds are giving us high rates, which is not the normal. Short-term instruments and normally don't give rates higher than long-term instruments. But because in the meantime, we are at a time where the money market funds which invest in short-term instruments are giving us high returns, I would advise that amount, hold it in a money market fund and let it also compound there. By the time this other investment is maturing and you combine the two totals, I wish you could do that calculation of what you will have by combining that 5,132 shillings for the entire period of this issue, assuming that the rates won't change much. And you combine with whatever is supposed to come for as coupons and the redemption amount from this investment and see the figures, how they grow. That said and done, then you have the most important calculations that we do when it comes to reopened bonds. That is the most important part that you require. And to answer, one of my subscribers who was asking, where do we get all this information? Where do we get all these relevant dates? That information is available through the bond prospectus. Every bond on issue has a catalog or a documentation that outlines all the details that you require to know for that particular bond, and it's called a bond prospectus. You can access a bond prospectus for any issue by visiting the CBK website and downloading it from there. In any case, in my next video, I'll be looking or taking you through to understand or on how to interpret the information in a bond prospectus. But before then, for this particular issue, just like the FXD1 2024-10, this bond has a selling period or the bidding period, which expires on 18th September. Then on the same day, 18th September, the auction shall happen. Then by Friday, 20th, that is when we shall be receiving the feedback or the confirmation of our payment details. Then the payment will be required to have been done from that Friday to Monday, 23rd September. Lastly but not the least, there is a question on taxation. A subscriber was asking me, when did the law change to reduce the withholding tax on interest on bonds from 15% to 10%? It's a matter of fiscal policy and the taxation laws. It is always a policy that the withholding tax on fixed coupon bonds or any other bonds apart from the infrastructure bonds that are issued for free, the other bonds are taxed generally at 15%. But all bonds that have a maturity period of more than 10 years, they are taxed at a withholding rate of 10%. And that is why the reason why these two bonds attract a withholding tax of 10%, because they both originally have a maturity period of 10 years and above. The first one being the FXD1 2024-10, which is 10 years, and the second one, the FXD1 2016-20. Any bond with a maturity period of 10 years and above attracts a withholding tax of 10%. And that is the reason why these two bonds, they are taxed at 10% withholding rate. Hope you're answered. Thank you for watching. And don't forget to subscribe to the channel, engage us in the comment section, and like this video while you are sharing it to another person.